there we go.
Okay, cool. So I'll start over. All right. So what's up, guys? So today we're talking about how to find winning plays. And as you guys know, I'm an options trader, and Andrew's more of a stock or a small cap shares guy, but he is getting into options now. And there's a lot of different ways you can do this. Yeah, George definitely saved the day because that's the only reason I asked if you're recording.
Yeah.
But there's a couple different ways you can find plays, right? So if you're trading options, for me, the my favorite thing about options is that there can be a lot of consistency when it comes to what plays you want to trade or what stocks you want to trade. Because as a day trader, there are opportunities within certain stocks every single day. So you don't necessarily have to search and find what stocks to trade. A lot of people hit me up like, Isaac, I don't know what to trade. I don't know what to trade. What do you trade? Or what are some stocks I should look for? How do you find plays every day? How did you know this was going to take off? How did you know that was going to take off? So for one, the first thing I like to do is I always have just my regulars, right? I always have my regulars, my daily stocks that I'm always going to have on my radar no matter what, right? So for me, that's SPY, Apple, Meta, which used to be Facebook. I like Nvidia, and I like Tesla, right? Those are my 5 main stocks, right? So SPY, Nvidia, Apple, Tesla, and I'm missing one. What did I just say? I forgot what it was, but I have those 5 main stocks, right? So whether and what those stocks are to you, it really doesn't matter. Like I choose those stocks for 2 different reasons. One, those are really good movers throughout the day, right? They have really good intraday movement. One thing you don't want to do, you don't want to have, Meta. One thing you don't want to do, you don't want to have stocks on your daily watch list that don't have a high ATR. And what ATR means is average to range. For example, if I'm a day trader and I'm somebody who's trading with a lot of capital, I want to day trade something like SPY. I want to day trade something like Nvidia, Apple, Tesla, Amazon. Well, before the split, Amazon, right? Maybe even Microsoft, right? You can go through a few of them. Google, right? Those big movers, stocks like those, they can move anywhere between $5, $10, $15, $20 a day, right? Not Apple, but these other stocks I named, right? Anything between, especially, and you don't need a crazy range, like anything between, I want to say, $3 move to $10 move a day, you're good, right? And the stocks I named usually can give you that. But one thing you don't want to trade is something like Ford, right? Something like let me think. Andrew, give me a small, just a stock. Snap.
Yeah,
right?
Snapchat. Yeah.
Yeah, like you don't
Or
want to trade
BBY
like
right now.
BBY. Yeah, just stocks like those because they don't have a high average range. For example, if I put $10,000 into Ford may move 10 cents that day because their ATR is not very high. They don't have a high average true range, right? Something like Snap, they may give me, I don't know, 5, 10, 20 cents, right? Where I can use, I put it in SPY, Nvidia, Meta, or one of these other guys, these bigger names, Tesla, they're going to give me $5 to $10 to $15 moves per day. And I'm not saying the stock may go from, it starts at 160 and ends the day at 175, right? That's a $15 move. But what I mean by that, it may move from 160 to 165 back down to 158, back up to 160, right? So there are moves throughout the day that are easy to capitalize on. But if you're trading something like Ford, Snap, any of these other little stocks, they're moving, they move 2 cents that direction, 8 cents that direction, 10 cents that direction, right? And it's not very volatile. It's not volatile enough for you to really capitalize on trades, right? And I usually stick with those stocks. See, I could choose a bunch of other stocks. There's hundreds and thousands of stocks on the stock market. In the stock market, I could choose a lot of different stocks. But the reason why I have the same watch list all the time is because I want to gain some, I want to be familiar with the stocks I'm trading, right? I trade SPY because I know how SPY moves, right? I like Nvidia, I like Meta, I like Apple, right? I like all these other guys. I like these other 5 stocks, 3 or 4 stocks, and I like to stick with those because I'm more comfortable with those stocks. Now, if you ever see me trade something else, QQQ. Yeah, that's another one. I really like QQQ. And I don't really like even saying Apple because Apple is the SPY has a really large, or SPY has a large holding. Apple, yeah, SPY has the largest holding, or Apple has the largest holding in SPY, right? So SPY and Apple usually look almost identical. So I usually just trade, if I'm gonna trade Apple, I might as well just trade SPY. It's kind of how I see it. But if I do defer outside my usual watch list, it's usually because there's news or there's something going on with a particular stock that has me interested. So a way you do this, right? You want to find a stock that or let's say you have your 5 usual stocks, right? I want everybody, your homework tonight is to go find maybe 2 to 5 stocks that you're going to stick to, you're going to be religious to, and no matter what, you're going to chart, you're going to look for opportunities within these stocks before you move on anywhere else, right? So if you ever see me trade a stock that's like, for example, I traded Baba. I called Baba on Blueprint last week, I think, sold for 30%. I think it ended up going like 50 or 100%, 300% if you swung it. But the reason I traded Baba is because Baba, or Chinese stock, had some news, right? So I found a stock that was affected by some news, which usually means that that stock is going to have higher volume or high relative volume, which is volume today that's higher than its usual amount. So let's say Baba usually has an average volume of 20 million. Let's say the day I saw it, Baba had 50 million, right? So that's high relative volume, right? Whenever you see a stock have higher than usual volume, I usually like to see what news is affecting that stock to make it have more volume than it usually would have, right? So, Baba had some, or China stocks had some news. I looked at Baba. Baba looked like it was setting up for a nice play, and I was able to capitalize on Baba because, and it's not on my usual list, but I wouldn't have traded it just to trade it because it's not within my usual list. Because I found that I found out that the less is more always. Less is more always in the stock market. Less indicators, the less stuff you have in your charts, the less stocks you're looking at, the better, or the more, I guess, the more structured you are, right? So I always stick with those 5, and anything else is just an outlier. But usually, I like to have my main few, and just a few I'm familiar with, and few I know will give me good moves every single day, unless it's just a choppy day in the market. And I've been able to make money just off these 5 stocks consistently, and everything else is just an outlier that has some type of catalyst, right? I don't know, not earnings. I'm a catalyst outside of earnings. I don't play earnings at all. Is not I really don't. I just prefer not to, and I don't really like it that much. It's actually the one part of the stock market I would consider gambling, playing earnings, because you never really know what guidance is going to be. You're not really ever sure about what the numbers are going to be. It's just too much that goes into earnings to really play confidently. But what's worked for me, and this is coming from somebody who I used to try to have 20, 25 stocks on my watch list. And I was like, yo, why am I playing? Why do I have 20, 25 stocks on my watch list? I realized that, the more stocks I had on my watch list, the more opportunities I was missing because, I'd missed my trigger on that stock. Okay, I'm gonna go to this stock. And while I was looking at this stock, a trigger hit from my other stock. And it doesn't matter how many alerts I had up, I was still missing stuff all over the place. I felt like I was really just, putting more stress on myself than I needed to. So I stick with the ones I want, or stick with the few I like. If there's specific news or something else, then I'll be interested in it. I may take a look, but I like to stick with these 5 stocks because I know that that I'll get the volume. I know there's liquidity in those contracts. I know I'm able to the ATR is decent, so I'm able to get in it, or the ATR is decent, so I know I'm going to catch a move, or there's plenty of moves to be caught within the stocks for that day, unless it's just one of those days where you can just buy and hold the whole day. But yeah, Tesla, SPY, Apple, Nvidia, Meta, those are my main dogs. If Amazon ever goes back to what it used to be, before the split, then I'll throw that back on. But Amazon's not on my list anymore. But that's really what I like. Stephanie, today we're talking about today is how to find winning plays. How to find winning plays. That's all we're talking about. So say you have the skill, right? Or let's say you don't have the skill. Let's just say you're trying to apply something you learned. We talked about risk management last week, right? So say you're trying to apply what we talked about risk management wise into the market on Tuesday when the market opens back up. But then you're stuck because you don't know what stocks to play. What we're talking about today is how you find those winning stocks. And there's different ways to go about it, right? Andrew's going to talk about something completely different from what I'm saying right now. But as an options trader, I'm saying that if you just have a few stocks that you can those are your go-to stocks. Like you go to your favorite restaurant, you can usually pick out, 1 to 3 things you like off that menu every single time. You're going to like it no matter what day you go. Like, that you'll be happy if you stick with these 3 things. That's how I kind of see it. I know these 5 stocks, I know I may miss other opportunities because get used to it. You're always going to miss opportunities in the stock market because there's just too many stocks to be able to play. But I know that if I stick with these 5, I'm going to be happy, right? I'm going to be very happy if I stick with these 5 because I know there's opportunity here. I'm familiar with them and I know I can take advantage of it because it has a decent ATR, meaning that there's moves for me to get in and get out with decent profit, right? I don't have to necessarily wait for the move all day. Like you play Ford, Snap, all those low stocks, you'll be waiting all day for a 5-cent move, 10-cent move, right? And that is not good. It's not a good stock to trade. I don't like Amazon anymore because Amazon, the ATR is a lot smaller now because of the split, right? Amazon used to be like $3,500, almost 4,000 at one point, or maybe over 4,000 at one point. I'm not sure, but they split. They had a stock split. Now Amazon's like $100. They move maybe $2-3 a day, or it's not as high as it used to be. So I don't really play Amazon anymore. How do you find ATR? You can find ATR. You can look it up. There's indicators for it. Like there's actually an average true range indicator. And so you can find, the ATR for stocks. Tesla also split, but Tesla's still very volatile as well. Tesla's still very volatile. And I'm sure, I don't know, Andrew, do you use screeners at all?
Yeah, I was gonna spend some time going over that for them.
Okay, because they were asking about screeners, and I rarely use screeners, honestly. That I don't think that rarely, as an options trader, you don't really need to use screeners unless you're just trying to find like some type of hidden gem. But I'll let Andrew go over that. But yeah, so like I was just to end it off, like I said, I have my main few, and if I'm looking for something that has news, or I'm just what I call scanning the market. I don't necessarily use a scanner, but when I say scanning the market, I'm usually looking at news or something that just trying to find a gem somewhere, right? Just trying to find a stock that may just explode. But so I'm just going to scan the market just to look. What do I use? Yahoo Finance is cool. Seeking Alpha is cool. Those are the 2 I look at. I like looking at Walter Bloomberg on Twitter. He's really solid. Didn't even think he was a real person at first because he never takes a day off. He's like robotic with all his news. Like he's really, really good. So I definitely think you should follow Walter Bloomberg on Twitter. He's legit. But those are the 3 I use. I don't, like I said, I don't really use a bunch of scanners. Andrew's going to get more into that. But from an option standpoint, what I want you guys to do, just find 2 to 3 stocks that you like. And I want you to stick with those stocks. Give it a month. Stick with those stocks. Not saying you can't trade anything else, but have those 3 stocks that you always know you can go back to no matter what. So you can make some money or, it's just something you're familiar with. But yeah, that's really all I got for right now. And I think I'll spin back for questions, but I'm gonna let Andrew go ahead and take it over.
Sure thing. And I want you guys to understand too, this is for beginners, right? And so I know some of this may seem foreign now, and it's only foreign because you're not doing it yet, right? And once you start to do it, once you start to go through the motions, things will start to click. And I think that's very important that you guys understand that. But anyhow, and to kind of further back what Isaac just said, I just started on options for this past month, and all I've been trading is just SPY and Tesla, and it's been super profitable, right? I don't need to get into that amount. I just, but to his point, all you need is 2, right? Or 5 or a handful, right? Now that's a little different in the small cap world. And there is no right or wrong here, right? We're just giving you guys different perspectives on what may work for you, right? Just the same way that we trade, maybe the way in which we trade may not exactly work for you, but it gives you a starting point to at least start somewhere, right? And from there, you can do with what you want. You can expand your knowledge. And that's one other thing I just want to add before we get into the small cap world is there's so many books out there. There's so many other mentors out there. There's so many videos out there that you can watch, read, and supplement the information that we're teaching you guys. And the only difference really, if you're expecting just to be in here for 4 weeks, us for free, and then start to go make $1,000 a week or $5,000 a week, it's not going to happen, right? It's what you put in is what you're going to get out, right? And so, and I'm can speak from experience. I read a lot of books. I'm sure Isaac has read books. I'm sure Isaac has mentors. I'm sure Isaac has watched different programs that have helped him, right? So really got to put that time in. But the small cap world is different from the option trading world. The reason being is because the small cap world, not one stock is going to work every single day. Where, SPY, Tesla, NVIDIA, you'll find a move every single day for those. For the small caps, it could be a one and done type of thing. It may move really, really big on one day, like maybe 100%, and then the next day just go down the drain, and the following months just go down the drain. That's why they're called small caps, right? They're not big companies. They're not big corporations. However, they can lead to big movement. And I want to show you guys how I go about screening for some of these things, and to give you guys just some websites that you guys can use for yourself. And the screeners, actually, you could even apply it to the option world for certain things. But let me just show you here real quick. Okay, so here is a simple website. This is called, before I start, can you guys see? I want to make sure I'm sharing the right screen. Can you see Finviz, the Finviz website?
Yeah, we can see it.
You see it? Okay, perfect. Okay, so on this website, when you first get here, you're going to see this homepage. Okay, and this is really cool. I like this homepage because it kind of gives you an idea of what's going on in the various sectors throughout the day, right? Here's your tech sector, here's your financial sector, utilities, basic goods, energy, industrial, consumer cycles, et cetera, right? Now, from here, where you want to go, again, this is finviz.com, you want to go to Screener. Very simple, okay? And I'm going to show you this other cool trick that you guys can do after Screener. So on Screener, you see different filters that you can pick. Now, I obviously want to have certain parameters, so then I could go over here to all. Okay, here's fundamental. Now, as a technical trader, I don't use fundamentals too much, but you can, or you can look at certain technicals. So I'm just going to click all. Okay, and one of the things that I want to work here going down this left column is looking for, okay, let's see, nothing. Okay, price. So on this left column, you can filter by price. Now, let's just say you want to find small caps or large caps or option that are greater than $1. Okay, so then you would come over here and say everything over $1, and then you'll click it, and then you'll start to notice that it starts to filter out the total number of stocks that meet that criteria. Okay, the next thing you want to do is come over here to now float or even short float. Okay, and you could find out, what, maybe with the short float, I want a high short float or I want a low short float, right? Maybe, based off of the after hours moves that it moved up a certain amount. Okay, you could come over here on this third column and you could filter by the volatility for the past couple of weeks with that particular stock, or what's the recent IPO date? Is it going to IPO within this week or within this month, right? You could come over here and find the relative volume, right? So this kind of goes into relationship of what Isaac talked about ATR. Relative volume is also really important, because if the relative volume is high on the current day in comparison to what it's been recently, then, that means there's a lot of eyes on that particular stock, right? So you could filter by price and just relative value. And you just see just that alone dropped us down to 629 stocks. Now you could even filter by float. Now with small caps, we essentially trade low float stocks. So you can say, you know what, I want to find something under 50 million. Okay, now I just went from 8,000 stocks to 600 stocks to now 200 stocks that meet that criteria. Then I could even go even further and say, you know what, let's look at the current volume on the day. The current volume needs to be at least over 100,000. Now I just went from 8,000 stocks to 600 stocks to 200 stocks, now to 131 stocks, right? We could even filter, is it a current doji? Is the gap up percentage today, is it up at least 10%? Now I just went from 8,000 to 600 to 400 to 200 to 100 to now 5 stocks that meet this criteria. And now, does this, type in the chat, is this easier now to go through these 5 stocks and see which one may be of value for you to trade? Absolutely, right? Now let's look at one of these stocks. Let's look at drug. Okay, so this would be Friday, right? So obviously the market's closed today, but this would have showed me the stock drug to look at for Friday. So let's see what drug did on Friday, shall we? So if I go over here and I maximize this cell and I type in drug, DRUG, look at what drug did. In the first market open, and excuse me, pre-market leading into the market open, this stock went from 1.6 to a high of 2.4. Okay. If I draw my little toolbar here, oops, I have my camera in the way. If I draw my little toolbar here and show the percentage of the difference between pre-market into that movement in market open, that was a move of about 46%. Okay. i.e., say you put $10,000 in on this trade, that would have been $4,700. If you put $1,000 in on this trade, that would have been $470 if you caught the whole move. However, many of us trade the market open, right? So you would have saw, hey, you know what? I see there's a lot of heavy resistance here pre-market at 2.1. If it breaks 2.1, I'm going to trade it. And lo and behold, okay, now we follow our trading strategy and signals, which is what we'll talk about next week. Okay, I'm not going to get into that here, but from the market open, once it breaks that pre-market resistance leading into that high, that's 13%. So again, you put $1,000 in, return back 13%, that's $130. Now that may seem small, but that only took less than 10 minutes. Okay, that was actually technically 5. Now $130 in 5 minutes on one day. That was on one trade. Now let's just assume you did $130 per day. Right? I always love doing this because it's so real and it's so true. And I think everyone needs to keep this into perspective, right? $130 a day times 252 trading days a year is $32,000. How many of you would like an extra $32,000 at the end of the year? All of you, right? Even me, right? So, and this only took a couple minutes, but it was found through the screener, right? We went back into our parameter here and we filtered from 8,000 stocks to 600 stocks to 400 stocks to 200 stocks to 5 stocks that meet our parameter. And then from there, we find out which one has the best setup for us to trade, right? We could even look at another one, right? Where maybe it wasn't the best setup. And, let's look at, let's go over here to FRZA. That was another one that was on the list. And when we look at that one, okay, it wasn't the best setup. At pre-market, it was really, really good. But then even during the market open, once we had our breakout, this went from 4.2 up here to a high of 4.6. That's 6%. You put in $100, that's $60. $50 a day times 252 is an extra 10K, right? So even then, there is an opportunity, right? And it's just a matter of being able to find those stocks. Now, this is just one way of finding stocks. Now you could even go through, I believe there's something in here for ATR. I could be wrong, but I'm almost positive there was. Okay, there's RSI, there's percent change, there's float, there's earnings. Here, let me go to technical analysis, TA. Okay, I'm gonna look back on how to find a filter by ATR, but you could totally filter by ATR. You could definitely do it on Thinkorswim, and I'm gonna show you that here in a second. Okay, so this is how you guys can find some winning stocks. Now, on the same thing for the option world, right? Maybe you want to trade stuff that has a large float, right? You want to look at stuff that's over, 200 million, right? You want to find stuff that is not under $1. You want to find stuff that's over at least $90 or over, at least, $100, right? And obviously it's not going to be up 10%. It may only be up 1%, right? And then there you go, right? So there's many different things that you guys can do within this screener to help you find winning stocks daily. I just showed you one way to do it on the small cap side. Now, the best way to do it is within one of the ways that I like to do it is within the Thinkorswim platform, because the Thinkorswim platform is extremely customizable. And I want to show you that here in a second. So let's go over this just really quick. ATR is on the second column. Oh, well, there you go. So let me go back to that real quick. Sorry. So ATR, second column, second from the bottom. There you go. Average true range, right? So now let's go back to that same example, right? Under 50 million. For our current volume has to be over 100,000. The float size to be under 50 mil, or let's do under 100 mil. And then, has to be at least over $1. And then the ATR you can put here to be, 1.5 or 2, right? And now you have a set number of stocks that meet that parameter. Okay. So great way that you guys could filter by ATR just using the setup here. Okay. The other setup that I want to cover just really quick is the screener on Thinkorswim. How many of you guys are using the Thinkorswim platform? A lot of you. Okay, great. All right, perfect. Now, within Thinkorswim, what you want to do is there's this tab called Scan. Once you hit Scan, it would open this right here. Now, we can do the same thing we did on Finviz, but we could get even a little bit more sexy with it. So one of the things we want to filter, right, and we could do this step by step, is, you know what, I only want to look at stocks that are between $1 to 50, let's say, or $1 to 25 for small cap. Okay. So then all of a sudden now I see again 7,000 stocks. Then I could add another filter and say, you know what, I want the volume, come down here and click on volume, and I want the volume to be at least 100,000. Okay, and hit scan. Now I just took 7,000 to 2,000, which is still a lot, right? Now I can add another filter and say, you know what, I want to also trade a stock based off of, let's go to study. It wouldn't be here. So now we start to add a study. So you can say, you know what, I want to go based off of, tell me when, instead of price performance, I will look up, you can go to custom and we could look up, ATR, right? So I could come over here and I want to know, based off of certain study, tell me the ATR, or I could come over here and say, you know what, I want to know, like, I don't know if you guys play crossovers or anything like that. You can say, you know what, or the average volume, right? I want the average volume at the past to be greater than X amount, right? Or I want the volatility to be really high, right? So there's a bunch of different things that you could do within here as well to look up different stuff. Now, one that people like to do are moving average crossovers, right? So let's just say you like using, the 9 exponential moving average. and you like when that crosses over the 20 exponential moving average, right? And you want this to be based off of 5 days, 5 minutes, right? Because that's how you take your day trade. So then you could say scan, and now I have 85 stocks. Okay, well, not all 85 are going to be profitable. From here, then I can go and look at which ones do I want to trade that meet these parameters, right? So there's so many different ways that you could go through with these screeners to help you find it. But ultimately, what it comes down to is the same thing that Isaac touched on, is finding the right quality trade, right? So as you guys saw on the Finviz scan, I went from thousands to just 5. And of those 5, maybe only 2 really work out, right? And those are the 2 that I'm going to focus on. So yes, there may be more stocks that are moving on the small cap world than on the option side of the world. However, we're still looking only for a handful of stocks that have quality setups. And you could set up your screener based off of the strategies that you use to trade. Maybe you trade when the candles break above the EMA. Maybe you trade based off of momentum. Maybe you trade based off of ATR or high or a breakout trade or whatever. And you can set up your screeners for these different scenarios. So for me, I always have a breakout trade scanner. I have a momentum scanner. I have all these different scanners that help me, but I'm not just solely reliant on those. The other thing I just want to show you, one last thing to touch on Isaac's point, is if I was to open up my Excel, and I think this is extremely important, is when I open this up, I have hundreds of weeks of data in here. I started putting it in different tabs and then I just got lazy and I made it all on week 11. But this is years worth of data of every single day, every single watch list I've ever built. And from here, I have another sheet that ends up taking this and putting a formula in that shows me how many times a certain stock has come up and how over time that stock has grown. And so the other thing that Isaac also touched on was being able to have your own runners, to have your own watch list, to be able to build your own stuff. Because if you're solely relying on a scanner, one thing that can happen, and this will be the last thing that I show, is I always like to use Paint. And so let's just say, where'd my Paint go? Let's just say you had a pre-market scanner, okay? And your pre-market scanner, was based off of, let me draw on these time zones here. So this is, this is yesterday's movement. This is pre-market. Okay. And then this is current. Okay. Now let's just say yesterday's movement or previous day's trading day, the stock went up and shot up here. Okay. You may have a pre-market scanner that finds stuff that is up maybe 5%. Okay. So let's just say yesterday's close. Let's just say this was $1. Okay. Now pre-market at some point before the market open, it's now at $1.05. Okay. Well, now it's up 5%. So it would pick up on your pre-market scanner. So then you would go and look at, hey, why is it moving up 5 extra cents or 5% before the market opens? Where, during the market open, you may expect it to just take off and maybe run up to 130, right? Or excuse me, $1.30. Now, let's just say you had this same scenario, but instead in the pre-market, it started to crash. And it kind of stayed like this during pre-market. And at this point, this is your zero line, right? So it's below your zero. So on your pre-market scanner, if you were solely relying on a scanner, this stock would not have been picked up. However, maybe during the market open, it still takes off in rockets, but you would have missed it because you were solely reliant on a pre-market scanner. This is why it's so important to also keep in mind previous day movers and stuff that has moved throughout the week, because they have potential to do what? Have continuation, right? So very, very important. Don't solely rely on a screener or a scanner. That's all I had. Hope that helps you guys.
Yeah, for sure. And I actually have I'll put you guys on one really quick. This is very, very like beginner stuff, but I've made thousands of dollars doing this. I don't really do it anymore or often because I just really don't need to or whatever, but it still works. Anybody in Blueprint that remembers that Bed Bath and Beyond play we took in November? Does anybody remember that? Was it November or like October of 2021? I think. Yeah, but for those who don't know, I called this play out. I was like BBBY, probably like a $7 call or $10 call or something like that. And I didn't even go heavy, man. I wish I did, Andrew. I didn't even go heavy at all. But I think I had $6,000 worth of shares, which I don't even know why I bought shares because I never bought shares back then. But I just bought $6,000 worth of shares, and I put 4,000 in options.
Oh shit.
And the stock went from actually what, let me show you what we caught really quick. Let me share my screen. Could you allow me to share my screen really quick?
Oh shit, my bad. I'm sorry.
You're good.
Yeah. Let me see.
Let me set this up anyway, see if I can find it really quick.
Okay, you should be able to share now.
All right, let me see if I can show you exactly what we caught. 1 second, let me find it really quick. It was back in November. Let's see. And the same thing for AMC, actually. Let me see, November. Yep, here it is right here. All right, let me share my screen really quick. Oh, my man got the he got the exact date. Hold on. All right. Yeah, so Andrew, this is what we call we entered right here.
Oh my god.
We entered at 1482, somewhere around there. And then the next day we gapped up like crazy. We gapped up all the way up to like 20. I think it went all as high as 25 overnight, and it came back down around 22, 23. But it was a ridiculous play. And I'm about to show you guys how I found that play. Yeah, but like I said, I had $6,000 worth of shares and like 4,000 worth of options. Those options went from $4,000 in value to, I want to say, 63,000 in value. And then the shares went from like, obviously the shares didn't go up as much because I actually sold those, was it pre-market? But it was crazy, Andrew. It was ridiculous. And this is
Dude,
the
that's
same thing for
wild.
AMC. Like everybody said, oh man, you caught AMC early, Look, I'll say it like this. This was way before I even knew what Reddit or what Wall Street Bets was a thing. But I bought I don't know how much was it, $5,000 or $6,000 worth of AMC at shares at like $2.80, right? So, and the next day it gapped up like crazy, so I was able to really take advantage of that. But let me share my screen one more time so you guys can see. And this is exactly how I found it, right? So it's a website called Stock Charts. Like I said, this is very, very, very beginner, right? Very beginner. But this is exactly how I do it. So if you're somebody who doesn't really understand, or you're still trying to look for plays or whatever, this is a very, very, very simple way to do so. But like Andrew said, this is not something to be like to rely on 100%, but it is a nice nice thing to have. So what you want to do is go to predefined. Let me go back so you guys can see it. Right. So this is the main page. All right, this is the main page. I go on charts and tools, or you can just scroll down right here, and you want to go until you see predefined scans, right? And so what I do with this, and this is good for small caps, or is this a screen? It's a screener, so small caps options, it doesn't matter. So what you want to do is, like, you have all your technical indicators, right? You have your technical indicators, you have your candlestick patterns. I don't know if it has chart patterns. Okay, it does have chart patterns as well. Didn't even know that. Like I said, I don't really use it too often, or at all, really. But what you can do, what I used to do, I used to like momentum trades, right? I used to like momentum trades that I could hold for maybe 1, 2, 3 days, or maybe an overnight breakout, right? So how I found it is I like my RSI, like my MACD indicators, right? So for example, let's go on bearish MACD crossover. So what I would do, I would click, right? And then I would go to edit scan criteria. And then I go down here to ticker properties, and I would click optionable. and I press add and then run scan. So pretty much now what it's going to show me is only going to show me stocks who have a bearish MACD crossover that are optional. And as you can see, has 500 entries, but it doesn't show 500, right? Because there's only one page. So this is how many stocks right now. Like I said, the market's already closed, so you're not going to get as many, nor they're going to be really high quality. Like some of them, the moves probably already happened. But let's say this is around 30 to 40 stocks right here. I don't know. I can't really tell. That have a bearish MACD crossover, right? So let's just say you wanted to see what was going on. Let's look at Wolf. No pun intended, but the Wolf's here. But as you can see here, we have a declining RSI. We have the MACD crossing over. There's bearish momentum. Let's see, there may be a possible play right here, right? And this is not something I would play or anything like that, but you can see you can, use your indicators, right? Whatever you want to do. Like you can play around with it based on whatever you like to do, right? But the criteria is the same, right? You look for nice bearish moves. Let's go back, right? And pretty much you can just go through all of them, right? There's not that many stocks here, but we can just click the chart and then see what we got going on, right? Some of them won't look good. You just go back and do what you got to do, Pan W, right? And you can just really just flow through them, and you can do it either way, right? Let's do, like, we can come back, right? Delete, right? And this is for me, like I like momentum plays, right? I want optionable. Let's do predefined scans. Let's see, let's do overbought with a declining RSI, right? There's only one right here now. But you can see, and this is just a random stock, but I guarantee you, like I said, it's the move. Like a lot of stocks just fell on Friday, so you won't really get a really solid scan on a Sunday when the market's closed tomorrow and Labor Day weekend. So the scans aren't really going to be that solid right now. But this is how I find a lot of, at least back when I didn't really understand chart patterns and market structure and things like that, and I wanted to find plays that I had a higher chance of going in one direction, not a whole bunch of consolidation, whatever. This would be my momentum indicator setup, right? This is how I find my plays, right? Let's see if we can find a decent one, right? So optionable. Sometimes you can even do this. Let's see. Nothing's really bullish, but let's do bullish MACD crossover and then candlestick building blocks. I want to make sure we're in the uptrend, right? I want to make sure we're in the uptrend. I press add, run scan. And look, we have a couple stocks here, right? Let's see. ATRX. Don't know much about that, right? Obviously not a stock I want to play with. None of these are like really big name stocks. Like I said, you won't really find any at this time of day, but a lot of times you can find some really good setups here. Obviously, based on your trading style, how you like to play things, you could, play it however you want to play it. But yeah, right now you won't get many good setups at all, just because it's the weekend and the market just moved down on Friday. But that's a really good way. I used to find stocks, and I was really honestly I was really making a lot of money doing that. But obviously I'm much better now, and I don't really need to use such basic stuff. I like price action and stuff now, but that's a really good way if you're a beginner and you're just starting, like you're really having trouble finding stocks. This can be an easy something for you to go to. 2 indicators, you're looking for momentum. Obviously, you got to get a good entry. Everything it's automatically showing you the daily chart. So obviously these plays are going to be a little slower as well. So it could provide just some type of, I guess, structure if you don't have any right now. What volume do you usually go for? Volume. So what high volume is to me is high relative volume. So let's say a stock usually has a volume of 10 million. Well, today has a volume of 20 million. To a lot of stocks, 20 million isn't high volume. But to this stock, particularly today, it's high volume because their average volume is 10 million. So because they're at 20 million now, that's high volume. So his volume is not a number. It's always relative to what the average is compared to what it is right now. Please give an example where to enter on an options trade. That's not like a 5-minute explanation. That'll take, yeah, that'll take
take a little time.
Yeah, take a little time. Yeah, you won't really benefit from that right now, but we'll definitely have time. Yeah, but like I said, and I'm sure Andrew can go through like something like stock charts and find you really good small cap setups, right? And like I said, you
Mhm.
can change from optional small caps, whatever you want to do. It's just a platform you can use to kind of filter out the noise and find what you want to look for specifically.
Yeah, 100%.
And because I like chart patterns and price action and stuff like that, it's not really beneficial for me to use something like this because even if I did use see the way they charted, sometimes they don't chart the way I like to chart, and maybe they'll miss stuff that I would have caught, right? But it's a good resource, right? Nothing's wrong with scanners at all. It's just a tool.
Yeah, it is a tool, and um, again, we can't rely just solely on the tool, right? You got to rely on your trading skills.
Hmm.
Um, that's gonna end up making or breaking you. So, I thought we were actually gonna take a little bit longer to go through all that. We got through that pretty quick. So,
Yeah, because I think
um,
the name of the game is simplicity.
yeah, yeah,
Like
100%.
especially at this part. Like I don't want to. You shouldn't spend like an hour. It shouldn't take you an hour, hour and a half, 2 hours, or all weekend to find potential plays. Like honestly,
Mhm.
I can go on a like if you hit one of these screeners, look at the news, go to your usual stocks. You should have a full watch list in no more than 15. Oh, okay. If you're a beginner, it shouldn't take you more than 30 minutes. But for somebody like me, like I don't know how long you spend, Andrew. Like it may take me, 15, 20 minutes to get a solid watch list. Like that's it.
Yeah, no, yeah, for real. Like, all I use is my screener and my setups, and then once I go through that, it honestly takes no more than 15 minutes to have everything already like mapped out. So like you guys are in the Discord, obviously, right? You guys see that watch list. That takes 15 minutes to make. Like literally. And of that watch list that I send out to you guys, there's at least one stock that moves. At least a minimum of 5%, right? We've had some really big ones these past couple weeks, which is nice. But there's always at least one that ends up taking off. Another resource, just so that you guys have it, and this is all recorded so you guys could go back and watch. The last one that I would recommend, that's also pretty easy, at least in the small cap world, to figure out. It's called Benzinga. It's another free website just like Finviz, and within here you just have to go to shit, where did I go to get here? It's like pre-market prep, and then it has everything pre-market, right? So here's all the pre-market movers, here's all the pre-market losers in the small cap world. And then from there, again, you do your technical analysis and find out what stocks which stocks will work best for you, right? The other last website that I want to give you guys is, because I don't know about you guys, but I know, since because I trade based off of technical indicators, um I always get questions on what do these indicators mean, and I think the best thing that one of the cool websites that you guys could go to is called Investopedia. And in Investopedia, oh my gosh, if that website even still exists, let's see. Oh, here you go. You can type in a certain indicator. So like I could type in the MACD, because that was one thing that both Isaac and I mentioned. And then you can click on MACD indicator explained with formula, examples, and limitations. So then when you click on it, here's everything. Here's a nice little video about it. And then it goes like in depth about everything you would need to learn about MACD, and in terms of the crossovers, and in terms of divergence and convergence, and go over different definitions. And then or you could even type in like exponential moving averages, right? And with this one, and I hit submit, you can do you know what's all the formula involved, what's the math involved, how is it actually calculated, what's the difference between a simple exponential moving average and an exponential moving average, right? So there, like I said in the beginning, there's so many resources that are out there. Ultimately, my recommendation is to keep it simple as possible, but it doesn't hurt to get um that background knowledge, right? If you think that'll help you. So um we will open it up to Q&A. One thing I did want to mention, and we'll just mention it briefly here too. I also want, guys, don't want you to think that this is Blueprint versus Stock Market Wolf, or Stock Market Wolf versus Blueprint, right? Me and Isaac are both here together because we have a lot of similarities, not only in trading, but then in just life. And we both value each other a great deal. So I have nothing and will ever have anything bad to say about him and or his program. And I hope the same is true for him. And because of that, because we have this relationship where we really just want to help you guys, we are looking to expand past this free sessions with you guys. And we'll talk about that more as we get closer to the weeks, but we are thinking about doing a month-long mentorship with people. Obviously that won't be free. It will cost, because we are going to be putting a lot of time into it to try to help you guys out. And it's going to be extremely thorough and extensive and high quality. So, I hope you guys are excited for that. We still have one more week free of giving you guys some free stuff. And then in the coming weeks after, we're thinking about launching that mentorship to really help those that are interested out. So, it's something to look forward to, but hopefully something that we could keep doing on for months and hopefully years to come. So with
Facts,
that,
facts.
Isaac, if you have anything to add, or if you want to start Q&A, or what do you think?
Yeah, but yeah, like you said, for anybody's who's interested, man, take it from somebody who started by themselves, because I started, I mean, you had the same start, but I didn't really have any type of resource. One thing I realized is that you will, and people who know me know, like, you look at my Instagram, I don't try to sell stuff or whatever. But one thing I know for sure, tuitions comes in two different ways. You either pay that joker to the market
Yeah.
and experience, or you pay it to somebody who who just knows the game. And I tell people all the time, like Andrew said, but this is not Blueprint versus Stock Market Wolf. It's literally called Blue Wolf Academy. But I tell people in my chat all the time, I said, bro, like, y'all need to come and get in this Discord with Andrew. I mean, there's not too many. I don't know any other multi 8-figure traders who are willing to spend the time just doing anything like this, right? Like, Andrew could be doing anything, literally anything he wants to do right now, but he's here with us and you guys. So definitely, man, just even if you're not interested in the mentorship, definitely just tune in next week as well. Last week, where we're that's week 4, and get some of this knowledge, man, because I don't think y'all understand, like, because I've been able to meet a few people who are doing it really big. I don't know necessarily on Andrew's level, but who are still doing really, like, millionaires, right? And most of those guys, some of those guys are like, especially in the trading world, where it's like it's more ego. Like, Andrew, if you probably know what I mean. It has so much to do with ego, especially now that everything's on social media and stuff. And a lot of those guys are really, like, assholes. If I'm being honest, like, a lot of the people that you guys probably follow, like, I've had one-on-one conversations with, I'm like, bro, like, how do you even how does anybody even like you? Like, obviously, like, honestly. So the fact that Andrew's, like, probably worth more than everybody I've talked to is out here doing this, man, it's really dope. And I hope you guys don't take it for granted. Like, seriously, like, it is really, really dope. But that's all. Like, we can open up the Q&A. I just wanted to get that out.
Appreciate it, man.
But yeah, what are some questions you guys have? Do you have the Q&A thing still, like the last week?
Yeah, the Q&A box is still there.
Okay.
You guys could chat in there. And then for those that are just joining for the first time, this is your first week, I highly recommend you go back and watch the other videos. Even if you guys are already caught up, I definitely recommend you guys going back and watch the other videos, because we're gonna kind of week 4 is going to be strategy. So we're kind of going to put a culmination of everything that we've talked about for the past 3 weeks now into one, along with that strategy piece. So it would behoove you to go through all 3 weeks again before that last 4th week. But yeah, the question box is in there. And then again, if you guys are new, what you could do is you could raise your hand if you have a question, and we will unmute you. You could join with us and just talk. Okay, it's 4:30. We could give you guys about half an hour of Q&A. Try to help you guys out.
All right. There's some pretty simple questions in the Q&A as well. Probably fly through those. Um, do you think this upcoming week will be choppy? No idea. No
No.
idea, but yeah. Like I'm a day trader, so I'll take it by the day. As a newbie, what customization should I focus on FinViz? I'll put it like this. What you need to do is go on FinViz and learn the
Play with it.
definition of everything. Learn
Mhm.
what anything you don't know, go on Google and search the definition of it. And then once you understand the definition of it, and you can have something, you can filter out what you actually want to look for in the market, and then go plug it in on FinViz or any screener because you actually know what it is. But if I tell you what to look for and you still don't know why you're looking for it, then you really won't understand what you're looking at anyways. So definitely check that out. Discord, Andrew, how do we join? Pretty much sure you can just join on his Instagram, Stock Market Wolf. Don't go to the wrong one.
No, Discord. I mean, you guys be in the Blue Wolf Discord, right? You know, I think Isaac and I are both giving watch list out in there and stuff. And then, like I said, once the mentorship happens, we'll be adding some stuff in there for the mentorship people specifically. So that's where you guys want to be.
Would a mentorship be options or small cap? Definitely both.
Both.
100% both.
Yeah, both. I mean, I plan to go as thorough as possible in giving you guys all the knowledge, right? It's the purpose and premise of the mentorship would be to expedite your learning curve, right? And both Isaac and I have gone through our own trials and tribulations in the market, right? We've had to pay the market, right, to learn, and we've gone the other way of having mentors and books and stuff, and now we can teach you guys through our years of experience of what not to do and what to do, and kind of how to expedite that learning curve for you guys, so to try to help you guys out. So it's going to be extremely extensive of the knowledge that is given in both the small cap and option world.
Facts. Would the mentorship classes be each Sunday, or would there be more? Oh, there would be definitely more meetings. It'll be like through the week type thing.
Oh yeah, it'll be through the week. It'll be at least the kind of way that I envision it, not to give out too much information right at the get, but you know, Monday through Friday we will have live trading. On afterwards we would go over your trades to fine tune those, and then on the weekends we will have coursework. And that would be, you know, both on sides of the field there. So
Yes, sir. Isaac, when choosing contracts for either calls or puts, do you only size in on how much you're willing to lose? No, because if I go in $10,000 in a play, I'm not willing to lose $10,000. But I will be willing to lose whatever my stop loss will be for that trade, whether that's technical or mental. But no, definitely not. What you just described is what we call size for zero in the option world. Usually you do that for earnings, right? If I'm willing to lose $2,000, I'll put $2,000 in a play. And if it goes to zero, whatever, I was willing to lose it. But I don't do that for a regular play. So while trading our options, premium changes. Yes, that's how you make money. Premium goes from $10 to $20. You make $10 per contract. If you've been paper trading for a month and been winning consistently, when do you think it's time to trade with your own money? I think the time is whenever you feel ready to do so, but understand that trading paper and then trading real money is completely different, because you're not losing anything when you lose a trade in paper trading account, but you lose money when you lose a trade with a real account. So keep that in mind. As what you're missing out on by paper trading is the mental aspect that comes with trading, which is also the hardest part to actually fine tune. Like the mental part is the hardest part of trading, in my opinion. And you're missing that when you paper trade, because you're not really, there's no consequence for losing a paper trade. There's a consequence for losing a real trade. So keep that in mind.
I like that.
Let me scroll down. Will the mentorship be different than the lifetime membership? Yes, very different.
Yeah. And don't get confused with that. So obviously, again, both Isaac and I have our own Instagrams, right? So you guys want to stay tuned for the mentorship program, not my lifetime program. So just kind of keep that in mind, right? don't get distracted. So if you are following me, I'm assuming people are following me. I don't know where they're all coming from. So I gotta, we all have our own businesses, right? I highly recommend for those that do follow me and are in my program, you guys should check out Isaac's program, right? He's an option guy, 100%, right? So again, Isaac and I both knew that this was a potential thing, or I wouldn't call it an issue that can happen, but there's nothing wrong with you again having multiple mentors. So if you want to learn just specifically from me, you're more welcome to do so. But again, Isaac and I are going to be putting on mentorships regularly, so you guys could get game there, right? So
Yeah, this isn't like we're not doing this to promote either of our own things. Like, we both know we have our own things. We're just focused on what we got. This the Blue Wolf. This is a separate thing from both of them. So we're not really worried about who joins what. Like, honestly, you can do whatever. But this is like our main focus right now for Isaac. So you have five stocks you're watching. Do you focus to trade 1 or 2 out of 5 as they go? Wherever the opportunity presents itself. I usually don't like to have too many open positions at one time. So I probably go like 1 position, 2 positions max. 3, 4, or 5. Then I rather not, because I'd rather go heavier in a few plays than lighter than a couple. So if I'm already in the play, I'll probably and I see another opportunity, I'll probably just go one more solid play. I won't just kind of get in a couple different plays and try to manage all of them and look at all these charts, right? What works for me, 1 to 2 plays at a time, a little bit heavier. But after that, I'm good. How do you, Andrew, are the other recordings, they're in the chat, right?
The other recordings are in the chat. Yeah, I post them. They are posted, I think, on the webinar dates, because I don't have the ability to add everyone in the others. But we can end up making another channel, Isaac, and just putting like a week 1 recording, week 2 recording, week 3 recording.
Yeah, we can do that for sure.
Yeah, and just kind of make it easy for them to find.
Okay.
But yes, they are. To answer that question, it is in the chat. You just got to go through some old messages to find it.
Isaac, how long did it take you to make the money back you lost after you lost around 50K? It wasn't very long, because over the next few months, I really picked it up. Like, so from 0 to 2, that second month, I made 50K. Then the day after that, I lost it. And then I want to say over the course of the next, 5 months, I had 6 figures in the account. So yeah, so I guess 5 months or whenever, I guess midway, I don't know. But I know 5 months later, I did have 6 figures in the account for sure. And also understand the market was completely different back then. So I'm not saying it's impossible now. No, it's definitely not impossible now, but you need more skill for sure to be trading in 2022 than you did in 2020, for sure. I have a question, but I'd rather speak. Yeah, they can raise their hands, right, Andrew?
Yeah. Who was that one?
Reggie.
Reggie? Okay, let's find Reggie. All right.
Reggie, raise your hand. Oh, there he goes.
There he goes. Go ahead, Reggie.
Hello?
Hey.
Hello. All right, I can hear me. All right. So I was wondering. So I was looking, and I remember Isaac at some time, because I had been in Isaac Blueprint for a little bit, and he had showed me something with the pre-market high and the pre-market low. But then at the same time, I know Jesla, he had showed me some things with open price and stuff like that. And I just wanted to know, when it comes to strategies, how do you know really which one to use? Like, I had used the pre-market one a little bit, but then sometimes the open price will work better for me. But I'll notice price may retrace and it'll like react around the pre-market. And I'll be like, oh, it's bouncing at the pre-market, even though I don't have it charted, because I'm using the open price strategy instead.
Mm-hmm.
I just wondered, do y'all put that into your technical analysis as y'all use your strategies?
Yeah, so one thing you have to understand is that nobody, like, I'm sure people have the same strategy somewhere, but you don't necessarily need to have the same strategy. Or, me and Jay, we trade very differently. Like, I never take I don't think I've ever really taken any of his trades, because I simply don't trade the way he likes to trade. Nor do I don't even like this, like some of the setups he has. I don't even like the setups Jay has a lot of times, but it works for him and he makes money doing it. So he's not wrong if he's making money, and I'm not wrong for not wanting to follow his strategy. It's just not suited for me, right? So I have my own thing. And so what you have to understand is that you have to then really develop something for yourself, right? Me and the Wolf, we may trade, we may have different setups that we like, we may have different strategies, but that doesn't mean either one of us are wrong. It just means that we have with all the information that's available, we have then been able to kind of cultivate our own personal strategy that works for us best. So one thing that you would have to just understand is that, okay, I see the pre-market high strat, or I see the pre-market strategy. I see the open price strategy. Now, what works best for me, or how do I need to maybe even mesh these two together so I know, so I'm at my most profitable self, right? So there is no right or wrong, right? Either one you want to use, or maybe you want to combine the two. That's cool for you. But one thing I would say for sure is, no matter what, you may see something on YouTube later, or you may see something on Twitter later that you like. You just, at the end of the day, you'll have to kind of form your own strategy so you can have some consistency in the market. Because if you're going into the trade or going into the day, kind of using this strategy and kind of using that strategy, then there is no consistency with that, right? But if you go in purposely looking for something very specific, then you will be able to at least find consistency in the market because you have consistency in your strategy. Does that make sense?
Yeah, that makes sense. Because at first when you was talking, I was trying to figure out like I know like y'all have y'all different things, and I'm saying that's cool. I'm saying like for a fact, like say you have a strategy, right? But you also know about 2 or 3 other strategies, but you're using that one strategy while making that one play at that moment. So
Mm-hmm.
then, but you keep in mind your other strategies. So when you see price bouncing at a certain area that's
Oh, okay.
not at that strategy, but you know that's from your other strategy, will you then start to implement or be like, okay, obviously that's the pre-market, so obviously I'm gonna take that bounce right there at that key level with that candlestick pattern
Mm-hmm.
because I already know that strategy, even though that's not the strategy I already plotted when using it at that moment.
Yeah, so that's really good. So what you just described is moving with the flow of the market, because not every strategy or not every situation calls for the same strategy. You have to know when to implement something, when to implement something else. Like, to your point, you said you like, when Jay does something here and I do something here. Yeah, at certain points, like oftentimes when I don't like something that Jay does, it's because my strategy, my personal strategy that I'm using right now won't fit for that situation. But for his, it may work because for whatever's going on with the price action, it's exactly what needs to be done. So what you described is going with the flow of the market. Like if I see, because really it's all about picking your spots. And sometimes when you pick your spots, you can't use the same move every time. Like I play basketball, so I like to use basketball as an example, right? Depending on how, like I may have a go-to move, but depending on how the defender's playing me, I may not be able to use that move. I may need to, instead of right to left crossover, I may need to just go left and then euro to the right and then lay it up. You know what I mean? Just depending on how the defender's the defender is defending me. So the same way in the stock market, you got to pick your spots. You got to know when to go slow, know when to go fast, know when to be aggressive. Know when to get to the free throw line, know when to shoot the 3-ball, right? So yeah, what you described was just literally taking what the defense is giving you, taking what the stock market is giving you. So yeah, you're good. That's exactly what you should do.
All right, cool. I appreciate you because I was thinking I was watching y'all previous video and I was like, I just thought about that because I had did something like that with the market. But you basically answered it, and I really appreciate both of y'all and everything y'all did.
Yeah, no doubt, no doubt, no doubt. That was a great question. That was a really, really great question because I know, yeah, there's so many different strategies. Jay's a great trader, but there's as long as you're making money, man, you good. As long as you're making money, you good.
100%. Let's see. Let's see another person with their hand raised. Let's do Jake.
Hello.
Hey.
Hello.
Yeah, I was just wondering, what is the best way to track your trades? Like when you hit the market and you want to go back over your trades at the end of the day, like what's the best way to track like the P&L on the trades and actually get the screenshot of what the charts was when you made that decision?
It's just simply just going back in time. Either you can automate it, like I use TradeZella, which is Umar Ashraf's platform. I'm sure there's other trade trackers out there. I know you could, even if you don't want to pay, you could use pen and paper. Honestly, pen and paper. I know Andrew use Excel. Andrew.
I use Excel. I just
Yeah,
solely use Excel.
Yeah, I mean, there's like what I used to do. I used to look at the time, look at the time I took the trade, go back after the trading day was over, write it down. Tesla for $800 call at 175. I took it off this setup. The trade was profitable because, or I didn't secure profit here. I should have done this, should have done that, and then move on to the next play. But yeah, that's really it. There's really no like crazy anything I use. I use TradeZeller, so everything's already automated. All I have to do is upload a CSV file, and then same day results, my trades are tracked, which is pretty dope.
Okay, cool. Thank you. That's all I had. Yeah, I appreciate it.
No doubt.
Yeah, y'all got a real cool program. I think I really want to stick with it.
I appreciate it, boss.
Man. All right. Let's see. Q&A box. Damn, there's 41 questions in there now.
Oh, all right. Let's see. Andrew, you have a PT for 5% and 10%, but what do you need to see in order to hold for a bigger move? Like when you capture the bigger move on DWAC, or is this a topic for next week?
We could go over it next week, but it's quite a bit to go over. But basically, at that 5 to 10 is where I shave my initial profit, and so depending on how fast it takes the stock to get to 5 to 10% will be my determining factor of how many shares of my initial share size that I bought in to get rid of. So if it took longer than 15 minutes to finally hit my 5 to 10% PT, I may sell half. If it took less than 5 minutes, then I may only sell a quarter or an eighth and let the rest ride. So it really depends on the stock and its movement of how quick it gets to that PT.
About risk management, if I only have $500 in my trading account, what does that, or if I only have $500 in my trading account, does that mean I can only risk 50 per trade? Or should I set a stop loss at 10% to minimize losses? Is it a big no-no to trade more than 10% of your account at once? Or should I focus on getting more money in my account first? I think he touched on he really answered the question a couple times.
Yeah.
Honestly. I always say there's if you read the stock market book, right? People will say you shouldn't trade more than 2% of your account, right? I think that's what they say, right, Andrew? Like 2%, 5%, something like that.
Risk more than 2%, yeah.
Yeah, risk more than 2%. And I always boil it down to it's up to it's all about your risk tolerance, right? Mm-hmm. It's all about your risk tolerance. For example, right? Because so I have like 4 TOS accounts. One of them had $3,000 in it, so I called it my small account while I had my main account. Now, because of my confidence level in my trading, I was like, okay, I'm going to, instead of withdrawing this, I'm actually going to see what I can do with this $3,000 because it's a cash account. So I really can't overtrade in it. I'll just take 1 or 2 solid trades a day, or really 1 solid trade a day because it's only $3,000, right? That month, I think this was in June or July, I went from 3,000 to 30,000, right? Just in that account. And I did so, up to a certain point, just risking, $3,000 and then risk $5,000. Every time I got more, I would just put everything into the trade until I got to a certain point. Then I started being smarter because I had more money in the account. But I also had a really tight stop loss, right? I didn't lose on any one trade any more than 15%. Now that was just because of my risk tolerance, my confidence level, and my experience. Because I know, and even the mental aspect because of that, I knew I had another account with, my main account with $30,000 in it. So even if I lost the 3,000, my mind wouldn't have been like, oh my gosh, I blew my account, because I had my main account right there. That 3,000 really wasn't that big of a deal to me. So that's also a mental aspect. But if you only have $3,000 to trade with at all, then you should definitely be smarter, right? If I had $3,000, I probably wouldn't put any more than 200 in any one trade, especially options trade. And that's just me, right? Because I know if I only had 3,000 to my name in my trading account, or 3,000 in all my trading accounts combined, then I would be very, very smart with that 3,000. No more than 200 to 250 per trade. Maybe at max, maybe a 15 to 20% stop loss. And obviously you're trying to maximize those trades. But yeah, like you said, don't risk too much per trade. With $500, you really want to get that much of a return risking only $50. So what I would say just, get you a side hustle or cut some
Mhm.
expenses and then fund the account, because it'll come to a point where like you're risking $50 to make probably like $10 on a trade. And then at that point, it's not even worth it. You probably will get more bang for your buck just getting a side hustle or cut off. Like, a lot of people have more money than they think. They don't understand that they just use a lot of it on stuff they don't need. Don't eat out so much. Maybe you need to, maybe sell some shoes or some, I sold some shoes, I was flipping on eBay, Shopify. I was running Uber Eats, Instacart just to put money in the account. Right. So you could definitely, that's what I would say. What would you say, Andrew?
No, yeah, 100%, man. You touched on the nail on the head on the last part, where I think it's really important um to build your education, and while you're building your education, to just keep funding it. Ideally, I think like a decent start, like they always have those $1,000 challenges, and you could definitely do it with that amount, but I think a really good start is like 5K. To be realistic. I mean, you could definitely do it with 1,000. You could do it with 2, 3. It's gonna take you a while. 500, shit, bro. It's gonna be hard. And keep in mind, risk is how much you're willing to lose on a trade, right? So the rule of thumb is 1 to 3% of your account per trade. So if you had a $500 account, 500 times 0.01, that's $5. 500 times 0.02, that's $10. 500 times 0.03, that's $15. So really per trade, you shouldn't be losing more than $15 per trade, right? Where you talk about 50, that's already 10% of your account, right? It's not going to take you much longer. It's not going to take you much longer to then lose it all, right? And we go back to that analogy that I talked about with heads or tails, right? You want to be in the game long. So there's so many things that you could do online, man. There's, and I mean, go detail cars, bro. Like that's what my son is doing. And all the money that he puts into there, he puts it into the market, and he's doing options and small caps right now. And he's already grown his money. I just made an account for him, and then he can trade through that. But I think it's really important to try to get that money up. But in the meantime, in the intermediate time, be learning. Where there's a will, there's a way.
Don't underestimate the learning process.
Mm-hmm.
Like, because a lot of people they just want to get in there and start trading because they know there's a unlimited earning potential, right?
Mm-hmm.
But you will lose all your money. Trust me. Just because like a lot of people think, I got a lot of people coming up to me, Andrew, like, yo, I got 50,000, man. Dead serious. I got 50,000, man. Should I put it all in the market, start trading options? I said, bro, like you will lose all of your money like so quick just because you have money.
Walk, run.
Like people say like, oh my gosh, I saw on the scanners, like where you see, flow algo, like one of those where you can see the flow of options. Like, oh man, I just saw $100,000 or $150,000 going to SPY calls, right? I'm like, bro, that could be an idiot with $150,000. Like, don't just go following, like, you know what I mean? I told my boy, I was talking to my friend the other day, and I said, bro, you remember when we saw it was Baba? Baba was at $220, and we saw 3 million and 5 million worth of call options going to Baba for a January 2023 expiration date. Baba's at $90 right now. So my thing is like, okay, like let me just follow them. Like, just because you have money does not, like, you see big numbers, that don't mean you're a great trader. Like, don't underestimate the learning process for sure.
No, 100%. I always talk about it: crawl, walk, run, right? Crawl, build your education, read books, get mentors, learn, right? Versus playing the market of tuition. Walk, practice in the simulator. Once you show consistency, run, do it in a small account. And then once you show consistency there, then it's just a matter of scalability. So crawl, walk, run, people. And that may take you a year or two, right? So
hey, as long as it needs to take, because at a certain point you just can't go back. I'm pretty sure you got to an age where you're like, yeah, I'm like, I can never, even if I tried, I don't think I could ever go back to where I was.
No. I saw a question earlier of how much the mentorship is going to be. We're not going to get into the specifics of that, but I'm actually just curious from the people that are in here still. How much would you pay? penned. How much would you pay for us to mentor you for a month every single day?
30
I'm
days.
just curious.
Oof,
Just
30
curious.
days. That's a
Yeah,
month.
30 days. 30 days of helping you guys out. Somebody said $30, bro. Oh man, that's great. That was funny. All right, some of you guys are on track. Some of you guys are way off, but it's all good. It's all good. I just wanted to see what you guys would say. It's funny. 30 bucks.
I mean,
man.
Andrew, you're an 8-figure guy. I would pay you right now about 15 just to have dinner.
15K
Just to have dinner.
just to have dinner. You know, on that note, you know that there's somebody, and I shit you not, I have the text message. Somebody wanted to pay off the rest of my house, which there isn't much left. And they wanted to then fly us over to Florida, pay for us to stay in Florida for a year. And within that year to teach this guy every single day.
That's crazy.
It's absolutely insane, bro.
That's crazy. And you know what's crazy? I have friends, Andrew, who have literally said, yo, if you call me at 3 a.m., I will get up, drop what I'm doing, and go. I'll be over your house at 3:30, and I will teach you everything. I will teach you absolutely everything. And you know, they will not, like, it's crazy. They will not hit. They don't even want to know. And they'd be like, yo, I'm trying to get right with money and stuff like that. I'm like, bro, I will show you how to do it. It's crazy.
Yeah.
Do you have people like that?
Oh no, man! I just had a whole live about this, and I even posted about it, and I took it down just because like I didn't want to make anyone feel like I was attacking them.
Yeah.
But you know, I have a lot of people like that where, you know, whether it be family or close friends, and I say, look, I want to teach you, and you would think that, you know, hey, here's somebody that's done well on the market. Here's somebody that's, you know, done something, maybe I'll learn from them, right? This is my friend, right? You're not going to set me wrong. And I teach them for 2 days or 3 days. And, you know, that's time away from me doing stuff, right? It's time away from me making my own money, or time away from me with my kids or with my wife or whatever. And then they stop. And to me, it's like so disrespectful. And it's like, you know, there's people that will fly from New York to come and visit. And there's people that would pay X amount to learn. And I'm giving you game for free, and you're just kind of taking me and the knowledge for advantage.
Mhm.
And you don't realize what the knowledge can do for you, right? It's like, this is a skill for me that made me $1.6 million trading SPY puts, bro. This is a skill for me with the month of August made me $3 million. I mean, how would you not want to learn that skill, right? Now, I'm not saying everyone's going to be able to make that, but it's a skill nonetheless that can do it for you, right? So it's just it baffles me, man. It's just like I just don't understand. But that's why it's a good segue to the people here, where you have to be committed. You have to be 100% committed to wanting to learn this game. This isn't something that you can pick up a book, get a mentor for a month, and then think like overnight you're going to make $1 million. It's not going to happen. You know, you really, really have to stay dedicated. And I think that's something that I like about Isaac as well, is, I mean, here is somebody that started really, really young and has done extremely well for himself, not only through his own trading, but through his program as well, and helping people out. Right. So there's a commitment right there. People that are interested, Isaac, are just going to find a reason to maybe want to learn, but then they're going to find every single excuse in the book as to why they didn't finish.
Yeah.
And
yeah.
you know, I think that's why I kind of stopped doing things for free, where you know, I found that people that are willing to pay are the ones that are going to be more committed, because they're putting their money on the line, right? They're putting, hey, I want to learn, I want to spend the time to learn, I want to pay to learn, versus, hey, I'm going to give it to you for free. They kind of take it for granted, and they're like, oh, you know what, he could teach me next week, or he could teach me the week after, or he could teach me the week after this. And it's like, nah, man, my time is not your time. You're on my watch.
Let me put it like this. Andrew. So I don't know if you know, but I think I told you, I used to have a course, right?
Mhm.
I used to have a course, and it wasn't even supposed to be like a huge money play for me. It was just something I was doing. and it ended up being a lot bigger than I anticipated. But I had a course, and the course did, and I'll tell you, I really don't care. Course did a little over $500,000, right? It did a little over $500,000 in just 1 year. And I stopped. And then I was like, you know what, man? Times are getting really tough. And I had a lot of people hit me up. And I was like, you know what? I'll put it on YouTube. I'll put my info on YouTube, right? And I got rid of the course. And mind you, I got rid of the course while it's still actively making 20 to 30K a month, right? I didn't even so I was literally just deleting 20 to 30K a month away from my monthly income, right? I just got rid of it, right? And I put it on YouTube. And to my shock, and this was just a learning lesson for me. This was just me growing up. I'm 21 years old when I did it. This is just me growing up. And I realized more people were calling me a potential scam, giving it away for free than the people were when I had a course. And it was so mind-boggling to me. I was like, bro, like they're like all the time I'll be like, yeah, what's the catch? What's the catch? Like, I was like, what are you talking about? And then like I had people, even still people like hit me up like, yo, do you have a course I can buy? Still, I have DMs right now. Yo, do you have a course I can buy? Do you have a course I can buy? So I was like, then it was like, okay, maybe people don't even feel like they're even really getting value unless they put money down, right? Because I have the info's there for free on YouTube, and then those are just outliers. Like I know a lot of people do appreciate the game that you put on YouTube, I put on YouTube, whatever. But it is to your point just now, like yo, like I don't think I could do things for free anymore. Not even just because people they take advantage of it, man. Like it's like a slap in the face. Like, bro, like it's like I got stories on stories on stories, bro. I'm not gonna get into it.
Dude, I'm right there with you, man. And
yeah,
at the end of the day, though, it's time, right? And I know both you and I put a lot of time to wanting to give out the best value, and that unfortunately should not be free, right? And we could do things for free like this, right? And what we're doing now for everyone in here, and I hope you guys are appreciating this free time. But the high level stuff, the in-depth stuff, yeah, you're either gonna pay the market or you're gonna pay a mentor.
Yeah. Hey, look, next time, like I had somebody ask me, he said, yo, man, why are you charging $40 a month to join your Discord or $40 for your course when you make all this money? If you had money, you wouldn't need to do this. I said, okay, well, why'd you pay $75,000 a year to major in art history at a liberal arts school? Like what? Like you gave away $75,000 a year to major in art history. So I'm like, so it just like what you said, man. I just stopped it.
And what I answer to that question, not to stray away from the questions here, but I think a lot of people always have this question, so it's like we're answering questions without them asking them. I always get that question. It's like, Drew, you just made 3 million last month. You make X amount trading. Why even give out the knowledge why not do it for free? Why do you have a business? Why do you charge, X amount per month? Why do you have a X amount membership that you charge X amount? One, it's extra income, right? It's passive income. So why not? Right. Number two, it took us time to make that course. It took time away from family. It took time away from making our own money to make something for you. So yes, it's going to be costly, right? Three, at least, and I know you do it every single day, is you're in the live room every day, helping people out, trading live or answering questions live, or you're giving out watch lists. That takes time, right? So you pay for somebody's time, you pay for their expertise. So that's why it costs time, right? And then the last thing is touching on, people that pay are going to be more into wanting to learn. I gave out game for free all of COVID, bro. All of COVID. And more people were interested when I started doing pay stuff than the free stuff. And because you hold yourself accountable. So anyway, that's why we do it, guys. But let's go back to some other questions. So on that same topic of the mentorship charge, whoever said $30, you're like way off, bro.
Let's see. How do you do this if you have a day job? It's all about it just, you got to plan your day. And we got to kind of work around your strategy as well. Like if you have Like if you work in the mornings a lot, maybe it may be more beneficial for you to be a swing trader, right? You
Mhm.
buy Monday, you look for a sell points Tuesday, Wednesday, right? Whatever you need to do. But it's very positive. I got truck drivers, I got people who work in a doctor's office, I got people who have work in Amazon warehouses, making extra. Like I had this one dude hit me up, he made 8K on Friday in his Amazon delivery truck. 8K, right? He said, bro, I would have had to work, you know, 2 months to get this, 2, 3 months to get this, right? So like whatever you need to do to manage your time, because we can't do it for you. You just gotta, you know, every time you get on your phone to sneak a text message, that could be you looking at the market. I'm just saying, but whatever you can do to manage your time, man, to be able to trade, and swing trading is popular amongst people who are really busy in the mornings. That's all I can really say.
Yeah, and not even that too. Like just think about the market technically opens, at least for those that are using Thinkorswim, 4 a.m. or 7 a.m. Eastern time, right? And you have all the way to even the aftermarket to find trades, right? And the aftermarket closes at 5 p.m., which will be 8 p.m. Eastern time. So you have all the way from 7 a.m. to 8 p.m. to trade pre-market, market open, intraday, the power hour, or after hours to find a stock to day trade. And even if you don't day trade, as Isaac said, you could swing trade, right? So there's really no excuse why you can't find at least one stock throughout the day to make some type of move for you, whether that's towards the upside or downside, and capitalize on it.
Is there any main customizers you look for the screener? I don't really use screeners. And like I said, you need to look up the definitions
All of them.
of all of them, regardless of what we do. You need to look at, I'm telling you right now, because you will be looking, because just because you find something on the screener based on the filters that we use does not mean those stocks are going to be ready to trade. You have to still know how to trade, even though you have the screeners, right? So look through all of them. And we have next week a strategy as well. So maybe we'll go over that a little bit. And I don't even use screeners like that, I promise you. But yeah, that's more of the Wolves thing. But definitely use or look at the definition of all of them.
Olivia, is the mentorship going to be one-on-one or is it going to be group as well? So it's going to be a group setting, but we are going to have it in tiers, right? So the program will be based off of tiers. So there will be like a basic package, there will be an intermediate package, and then there will be a tier for getting additional like one-on-one help. So we will have it structured for everyone to try to make it affordable for as many people as possible. But for the one-on-one stuff, that's going to be our top premium selection there.
Isaac, do you recommend only trading 9:30 to 11, 3 and 4? Yeah, those are probably my most popular hours. 9:30 to 11 and 3 and 4 for Eastern time. I would say, yeah, those are good. Those are good times. Lots of usually the volume and volatility, and it's really good around those times. Market open, market close.
After this, I'll ask somebody with their hand up to talk, but I saw this one right here and I just want to touch on it. You need about 100,000 to 200,000 trading account to quit your job, plus a separate savings account for emergency. I would say that is 100% false. You do need a savings account, in terms of an emergency, because you never know what's going to happen. But
yeah, 100K to 200K was kind of extreme.
Yeah, 100 to 200K is extremely extreme. The thing that I always tell people is, if you can't manage $1,000, what makes you think you can manage 10,000 or 100,000 for a matter of that, right? The account that you're trading with needs to be manageable and profitable. And when you can show profitability, then you can start trading. And the rule of thumb is your profit should be 2x of that of your 9 to 5. I would aim for a 3x. And then at that point, then you can let go of your 9 to 5, right? Because you're going to get taxed a shit ton, right? So just keep that in mind.
Yeah, think about it. Like, you don't need 100K, 200K to trade full time. Like, really, if I'm being real, If you had 30K in your account,
30K, bro. Yeah.
you're good.
You said
Because
30K, bro.
or even like, and I only say 30K because you need 25K at least to be able to day trade unlimited. But even if I had a cash account and I have 15K, right, I could guarantee I could pay
Still
all my
damage,
bills.
bro.
I could pay all my bills with 15K, right? 15K, and not just like that's just as a minimum in my day trading account, right? What car note, couple hundred, groceries with a couple hundred, whatever, phone bills, utilities, all that stuff. Like I can do that in maybe 1 or 2 days. I can just take care of that, and then everything else is just on top of my necessities. So you definitely don't need 100K, 200. If you need 100K, 200K, like I don't know what you paying for, but yeah, definitely not.
Let's ask someone here. We have CD's had his hand up for a while, he or she. So CD, go ahead.
Thank you. Isaac, I wanted to ask you, because you mentioned something about mindset. I wanted to see if you could brush on that a little bit more to talk about mindset. Any books or program or anything media that you've used, or how do you help to get your mindset right? Because that's, I know, has been a really difficult thing for a lot of people.
Yeah. So what I've realized in my trading journey is that the turning point for me was not anything. It had nothing to do with the charts, had nothing to do with anything technical. It had everything to do with my psychology and my mental strength and mental discipline. I was not very, at least even several months ago, I was not very disciplined mentally. I was not like at all. Or yeah, I turned around because I was going to pick up that book, but it's in my bag over there. Mark Douglas, Disciplined Trader, Mark Douglas, Trading in the Zone, David Goggins, Can't Hurt Me. I forgot his name, but The Compounding Effect, Atomic Habits. You have to understand, and I made an Instagram post about this a few days ago. But you have to understand, who you are as a person is exactly what will be reflected in the stock market. The market will show you if you're not disciplined. The market will show you if you're impulsive. The market will show you if you're, even the market will show you things, even if you're just trying to make gains to screenshot and send it in the chat. The market will show you all of that, right? Market will show you you're too greedy. The market will show you if you're scared. The market will show you if you're not confident. Who you are outside the market and who you are inside the market is the same exact person. You can't turn it on and turn it off. And that's when I had to realize, I was like, what I'm doing outside of the market is directly affecting my performance inside the market, right? When I know I should be, when I know I should go to the gym, when I know I should, eat healthier, when I know I should do all these other things and I refuse to do them, that lack of discipline is showcasing itself in the market, and I'm paying for it because I'm losing money. So that's what I had to realize. And once I got that down, man, it was like, it was a whole new market for me, right? Just understanding the market it's just an ocean, man. It's an ocean and you're the surfer. Whether you surf or not, the ocean's going to be moving. The ocean's going to do what the ocean does. And as a surfer, you got to pick your spots and ride the wave when you get in. But if you're not disciplined, you're going to fall off the board every time. So that's that for me, that was it.
Okay. All right. Thank you.
No doubt.
Yeah, surfer fall in the water, that shark's gonna eat your ass up.
Yeah. Yeah, man. It'll get you every time.
Yeah. Let's see. Nick.
Nick Kucharski.
Going once, twice.
Sold
All right, Nick,
to the next
sold.
person.
All right, let's go. Someone true KD fan.
Yo, what's up, y'all? What's up,
What's
Isaac?
up, bro?
So I had a question on setting stop losses. Let's say with a $1,000 account. So let's say you take 10% of your account for each trade, which is $100. You set your stop loss to 20%. Well, this recently happened to me. I set my stop loss to 20%. I lost $20, got out of the trade, but then I seen soon that trade go up like 400%. How can I get around that? You get what I'm saying?
Yeah. So when you have a smaller account, you have to understand that it sucks, but you are those hard stops, you have to follow them, because if you're wrong and you lose 10% of your account, then that's a huge chunk of your account loss. And you just can't risk that. It's one of those, is one of the bad things about having a small account, is that you can't have a little leeway, right? Let's say something may hit my stop loss, but I'm looking at the charts and I know it's going to go the direction I want to. With a bigger account, I can hold that, because I'm not at risk of losing 10% of my entire account in one trade. But when you have a smaller account, it's a little tough. And it is what it is. Like, for me personally, like, I have a strict set of rules, right? I have a strict set of rules, and sometimes it bites me because it ends up going my direction. But in order to stay disciplined, I have to follow my stop loss. Like, okay, if it goes over, let's say my stop loss is $10. If it goes over $10,
Yeah.
I have to get out the trade. If the candle closes above $10 on a 5-minute chart, I got to get out the trade.
Okay.
And sometimes I'm able to identify a weak volume. I know it's just a false breakout, and it's going to come back down where I want it to go. That happened with Baba last week, right? MM stepped in, pushed it above my stop loss price. I knew for my small accounts, I had a stop loss. I said, 15% stop loss, because I don't want you guys to lose a chunk of your account. So I need you to respect this stop loss, because you're not going to blame me if you lose a bunch of money or a huge chunk of your account, right? You have a small account. This is the standards or the rules you have to conform to because of your account size. But me, I'm staying in because I can identify weak volume, and I know that it was a false breakout, and I know we're going to come back down. We ended up making money on that play, but small accounts got shook out because they had a small account. So it's just one of those things where you could be learning at the same time, but keep adding money to that account. So eventually you can get to, like I say, my sweet spot, like Andrew said, my sweet spot has always been around 5K, right? You can get 5K, then you can really start making those bigger jumps in your account. But when you have $1,000 account, like Andrew said, it's possible, but it's definitely a lot harder because of things like that.
Yeah. Okay. Thank you for that, bro. That was well said, man. Appreciate
No
it.
doubt.
Appreciate it, man. See, we're at 5:17. Is there any other questions you want to answer, Isaac?
Here's one simple one, and then I guess we can go to one more of the, or whatever of the, I don't know how many hand raised we have, but I currently have a margin account with less than 25K. Can I switch back to a cash account to day trade, or should I just open a new cash account? You can switch back so you don't have to go through the whole transfer process. Just call your broker or whoever you have, switch back. They can switch back within or like a day, like next day or whatever. Have a cash account, do that until you have 25K in your account, or really like 26, 27K. So you can't just go back to get margin called because you lost $10 and now you have $24,000, $990 in your account. But yeah, just call your broker, switch back to a cash account, trade like that until you have enough for a margin. You have enough so you're comfortably at a margin account, and then you're good to go back with the margin, or you'll be over that 25K. You can go back to full margin and start trading.
I saw this one earlier and I just want to touch on it because it looks like she wrote it like 3 times. Reason for trading small caps versus large caps. So I do both now. And options, has, believe it or not, has been more profitable for me in the past 13 years than in any month that I've ever traded than small caps. With that being said, though, I've been extremely successful trading small caps. Now, one of the reasons why you want to trade small caps is because for certain stocks, especially stocks that recently IPO, or certain, small cap like biotechs and things of that nature, they are non-optionable. So you can't even trade options to begin with them. And if one of those ends up having really good news, you're talking about sometimes a 1,000 to 2,000% runner within hours.
Yeah.
Within hours. I'm not kidding you. We had, at the peak of COVID, we had 20 of those things. We had 20 small caps that made over 2,000% returns. I shit you not.
Sheesh.
And so that's why I still stick with the small caps, because you don't ever want to miss out on those. Like HKD, I don't think that one was optionable. And that's one that went from like what? HKD, that's one where I had
20
that,
to 2,000.
Yeah, 20 to 2,000, that 2,555, right? So it went from $20 to $2,555 per share. It was non-optionable. And if I remember correctly, and it made a shit ton of money, right? That's the one where I made 1.5 million in a week swing trading it. Or like BPH or I don't remember if DWAC was optionable to begin with, but that one was also another example, right? So that's why I still trade small caps, because there's always that one gem, right? And from the time that I've been doing this, there's been a plethora of them. 2020 had the most, like I said, over 20. 2021 had about 15, and I track every single one. Okay, and I keep notes, so I know what the numbers I'm talking about. 2022 so far, we've had about 15, which is actually pretty nice. But we didn't start getting those 15 till after Q1, and things started to kind of shaping up a little bit. So that's kind of why you still want to trade. Now, the large cap, like your Teslas, your Amazon, Facebook, Netflix, Google, I would never trade shares with. I would just trade options.
Way too big.
Yeah, way too big, and you would have to wait for way too much of a movement. And to put it into an example, on that Friday that I caught SPY puts, it went from 420 down to 400. Well, that's only a 5% move when you think about it in terms of share size, right? Dropping from 420 to 400. But the puts increased from the in the money puts that I bought, moved up 700%, and the out of money puts that I'm now realizing was super risky. Those those moved 13,000%, right? So had I bought just regular shares, it probably would have been a $10,000 trade. With options, it was a $1.6 million trade. So again, options is definitely something that I 100% agree everyone should learn how to do. But small caps here or there are just as nice too once in a while. So if you could do both, why not? Right?
Yeah.
Let's see. One more question from the people with their hand raised. Someone that hasn't put their hand up before. And actually, I'll give let me do this. Let me lower everybody's hand. And now if you have a question, raise your hand. And if you haven't asked before, we will
First one to put your hand up, go.
yeah, first one to put your hand up. We're gonna go. Let's see. Jalen Wilson.
Oh, hey, can y'all hear me?
Yeah.
I appreciate it for selecting me.
No doubt. What's your question, boss?
Yeah, quick question for Wolf. I just had a quick question on his filters for the Finviz, because I know it's different for like small caps.
Uh-huh.
Do you like typically just look at volatility or volume? Because I'm looking at the thing and there's like 20-day SMA mover, like there's like a wide variety.
Yeah, there's a wide variety in Finviz. When I go over strategy, I could go over it a little bit more of like exactly what we're looking for, but you mainly want to filter by price. You want to filter by float, because float is the amount of shares that are available to trade. So you got to think about it in like economy standpoint, right? If there is a low supply, which is shares, and a high demand, then you'll get that push. You know what I mean? So it's basic economy, right? Low supply but high demand. What do you think that's gonna do to the price of the underlying asset? It's gonna increase, right? So for small caps, you want to look for something between maybe $1 to 10, right? Depending on your account size. So then you could filter the price by that, and then I would filter by float, and I would filter something less than 50 million shares, and that's going to be a low float. I would also filter to make sure it's liquid by at least 100,000 in terms of volume, and that will be my basis. And then from there, you could play with, like Isaac said before, play with all the other filters to kind of find what fits your what you look for.
Oh, for sure. Thank you.
Hopefully I answered your question. All right. If that is, we're at 5:30. We're a little bit over some time, but it's all good. Isaac, did you have any more you wanted to go over, or are you good?
No, I'm good, man. We got one more session left. This has been really cool so far, man. I appreciate everybody tuning in.
No, yeah, 100%. 100%. Thank you guys so much. And I do want to touch on one last thing. I know we touched about it on the risk management side, but I want to bring it up just one more time to just kind of drive it home, because I've got some feedback over the weekend from some different various people that are new. And please, please, please seek help sooner than later. Okay. Don't message Isaac or myself when you're down over $20,000. Don't message us when you're down negative $10,000. Message us when you're down $200, right? Come to us sooner than later, right? Because when you hit us up and you're like, bro, I'm down 100K, what are we supposed to do with that, right? You know how hard it's going to take to get back that 100K, right? And I always ask those people that end up messaging, like a lot of them come from different programs, right? Maybe you guys joined Wall Street Bets and you guys went all, YOLO on AMC again for whatever reason, who knows, right? But please make sure you know what you're doing and ask for help. Like, we aren't here to judge you. We've been in your shoes before. We are here to help you, right? So if you're struggling, ask for help. Ask somebody in the group for help. Ask, go read a book on it, right? Go watch another video on it. But the worst thing that you can do is try to do it yourself and keep making the same mistake over and over and over. And the next thing you know, your account is gone. And what should have been an enjoyable experience, I want trading to be so enjoyable for you guys, because it's something that has changed both mine and Isaac's lives for the better, right? And I want it to be a positive thing for you. I don't want it to be a negative thing or cause rift in your marriage or something like that, right? So please, please, please understand to take it in stride, to seek help sooner than later, and we are here to help you with that. So thank you guys for staying tuned. I know you guys could have done a bunch of other things on this weekend, and I hope you guys have a great rest of your weekend and be safe out there, and we'll see you Tuesday.
All right, y'all be easy.